Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is November 21st, 2025. S&P sitting at 66.13. Is that what I read earlier? 66, yeah, 66.20. My name is McMillan, joined today by our senior analyst, Kevin Firari. A little bit more active of a week.
Yeah, I would say, especially yesterday. It was a fun one.
Yeah. So, I mean, I guess, stocks have been trickling lower, we could say, since late October, and even, a bounce. You and I were talking about this yesterday. I mean, up until, last Wednesday, we were 1% from all-time highs. Kind of trickled down since then. Nothing super dramatic. Lots of anticipation over what was going to happen with Nvidia. And they reported, I know it was more. I think they beat. So Thursday morning, a broad approval from the market, and everyone happy, everyone ready to resume the uptrend. And that certainly turned into something different by the close. A lot of big, nasty bearish engulfing candles out there. Really interesting. And we're really back to what I find on most charts, including the S&P. So we kind of did this back on October 10th. Really nasty one day, and then kind of meandered upwards, got to all-time highs. Everything's back on track. And then we get to the same spot yesterday. And we saw some selling last Friday and Monday, the 67.50 level. But they hit it pretty hard. So fascinating. We've kind of got these two almost pillar candles on either side of the current all-time high. So certainly, I will say there's certainly some supply at 67.50.
Mm-hmm. Yeah, for sure. Nice to see him hold 6,500 again. So I guess the boundaries.
Today. There is a bounce today, which I guess typically expected, right? And of course, you get your COVIDs and things like that where things get going. But I mean, even back in February of this year, we had February 27th, pretty nasty, big red candle. Well, really, even going back to December of 2024. But we had a nice recovery. We've got a, down over 2% next day. We get most of that back, up 1.63. And the day after that, a Monday, of course, another big candle. And then we trade down into so certainly not out of the woods yet, but they are bouncing stocks for now.
Mm-hmm. Yeah, for sure. I mean, that 67.60, 6,500. I mean, the importance of those levels is just each time we test them, right? Just continue to grow, which, I mean, it's nice that it's kind of a relatively tight range if you do need to make some adjustments. I mean, you're getting some pretty well-defined levels, I think, to be able to do that.
Is there anything that would say that makes you think this is similar or different to August 10th? Was it just like a big candle and then we meander upwards? Or you think we just do that again? Or is it different? Is it going to be different? We're going to go lower?
I mean, I guess the assumption's got to be you continue higher, right? Like in the direction of the underlying trend, which is still up.
I think that's got to be the base assumption. Upward sloping 200-day, which sucks because usually you get these types of days when you're already in a downtrend. Now we could be, right? I mean, October 27th or 29th, I think was the official intraday all-time high, where that was like 69. What was it, 6,900? It's usually you don't necessarily see these types of bars that close to all-time highs. Although I guess I say that, although over the last few years, we certainly have a couple times. Yeah, I don't know. I think one of the bigger, like, I guess hindsight's 2020, Bitcoin had been weak for a while. That doesn't have to get going for stocks to go back up. I know there's been some extremes in put call ratio, daily volume.
Mm-hmm.
Although daily volume, depending on what you look at, I don't know if yesterday was, if you look at SPY, yesterday was definitely a big day, biggest day since that October 10th. And before that, August 1st. And then before that, you had to go back to the tariff stuff in April. All those were bottoms. I don't know if I'm a buyer that it's that simple this time. I think the market underneath has changed. Now, maybe not, hasn't changed. It was pretty weak in October 10th. I don't really think breadth has improved a ton. I think I saw a tweet yesterday. S&P advanced decline line was 6 months. I think it was S&P. Might have been NYA. I should have looked before I hopped on here. But I don't know. I feel like we're just a lot less momentum overall in the market than right now than any of those past instances.
Right. And I think probably one of the more interesting things, at least to me, over like the last month or so, if you think in terms of like just sector rotation, what you would expect as you near more of a market top, right? Things like, energy, healthcare, staples, I guess even maybe materials to a certain degree, but I think we've kind of, maybe already kind of had that move. But, over the past month, the only two sectors that, are positive is energy and healthcare.
So you're saying we are kind of rotating into this?
I mean, it seems definitely.
Why? Yeah. Why is that a thing? Why do people rotate? I mean, I kind of get healthcare. It's because it's kind of now. I don't know how staple-ish healthcare is anymore. I mean, I get it from if you want to own Johnson & Johnson and Eli Lilly.
Yeah, but that's not really what's,
it's not necessarily. Yeah, it's like so biotechy now.
Mm-hmm.
But I mean, to your point, nonetheless, they are buying it up. Yeah, that's interesting. Energy, I don't really get that one either. But that's what the data says.
Right, because I wasn't really expecting that either. I mean, it didn't seem like.
But we've seen that, right? I mean, we've seen that for years. They're like, oh, when you get, towards the end of the bull market, people start buying. I don't know. And staples have been, I mean, I don't even think staples ever got to an all-time high, did they? Like, they never got above their September 2024 high. They've been terrible this year. I mean, they've been recovering the last few days, I guess. But
yeah, and I think like the timing's kind of interesting with like XLP retesting like 75, I guess we'll call it. You know what I mean? And holding that level.
Yeah.
Heading back up towards the 200 day now. So I don't.
What a mess.
Yeah, that is a chop fest.
But yeah, I mean, you would think that people would start, moving into those areas. Staples kind of, I mean, December 2021, people started moving into staples.
Like
May 2018. I mean, May 2018. And I mean, there is people that started moving into staples. I mean, on a relative basis. So I am a firm believer that there are kind of these things, these risk off areas that pop up. We haven't seen that yet.
More like the industry level. I mean, it's all within those buckets. Like your oil, services, exploration, production. Insurance is positive over the past month. Regional banks, and like that's it. Well, in biotech, I mean, we talked about that, but
it's kind of impressive how XCS does look pretty good.
Mm-hmm.
Relative charts kind of trying to do something.
Yeah, I mean, it's like all these areas are, which we were kind of talking about before we started recording, like definitely more small cap focused too, which, with kind of that candle, especially today with IWM, is pretty interesting.
Yeah. And I look at like a KRE, I mean, it's just floating around. It's 200 day. It's such a flat. I mean, that's flat. You could put a golf ball on that 200 day. But
Somebody else could. I couldn't, but yeah.
Such a mess. It's holding in. I mean, they're holding in there.
Mm-hmm.
We are missing. I feel like we're missing some classic. Hey, there's about to be a decent correction. We've already had a 20% correction this year. Doesn't mean we can't get two of them.
Right.
But yeah, it's a tough one. And then is that? Do we just rotate into all this stuff? Then what does that mean? Again? What's that mean for like the S&P since it's so tech heavy?
Mm-hmm. Yeah, I mean, is that your? Yeah, I mean, because Dave's talked about this too. I mean, do you just essentially go sideways here through the rest of the year, and is that essentially because of that rotation into some of these more, small cap focused areas where now IWM on a relative basis is finally gonna, start catching a bid here, and you see some of those other areas like energy and things like that kind of pick it up.
If you look at the KBE relative charts, it's just the same and same for KRE.
Mm-hmm.
I mean, you could definitely bottom here on a long-term basis.
For sure.
You could, but they just, I mean, how many times have we said that?
Yeah.
They could do it, though.
Mm-hmm.
They could. Or is this just I don't know, man. Paul never let me pay that guy. I never got to know what today's close was going to be.
No. A couple hours, you'll find out for free. Well, not necessarily for free, but I don't know. And I mean, Dave shared this morning. We were kind of talking about that. Like cash levels for fund managers, pretty low level.
Yeah, since what? Like low since 2011, basically?
Mm-hmm.
And then, but like what right? So, I mean, why we don't, like in April, we were 100% cash.
Yeah, I mean, you see a spike.
But we weren't really 100% cash. We just owned short-term T-bill ETFs.
Mm-hmm.
So I wonder, I don't know what to make of that data. I do think it's valuable, but when you're on this side of the fence and you understand how it works, I'm not saying that makes us like special or something, but it leads to a lot more questions.
Right.
Like, well, what are people actually invested in? Does this correlate? Or you brought up a good point about, do people just buy, you can get a return on something now. So it's, no one just has cash. Like having cash on a statement 5 years ago, having cash on a statement now, your client's going to ask why. If you're going to be in cash, that's fine, but why aren't you going to get like?
Right. I mean, I think it helps a little bit that there was a spike in that metric, like in April.
Yeah.
So it went from like essentially 4% to, not quite 5%. So I mean, you at least saw a jump there. So I think you might see the same reactions, just not the same magnitude of moves necessarily now, with there being other places you can put your cash, to actually get a return, get some yield. Maybe, I don't know. But there really was no reaction whatsoever, at least yet. But I mean, kind of your point before, it's not like we're really that far from all-time highs yet either. I think break back down below 6,500, that might start to be a different story.
Yeah, 6,500 is the key. I think about 750, probably back on track.
Mm-hmm.
We can all take a big sigh of relief. I'm not saying that, obviously that's not guaranteed. I mean, all-time highs would be better. But you get back above both these big this is clearly a big supply area. You get back above that, then okay, we've probably chewed through, whatever supply was out there. But yeah, below, yeah, we'll call it yesterday's lows, 65, what do you call it, 6550, 6,500?
Mm-hmm.
Yeah. It's the same area as the October 10th lows. Again, the fact that we had some a lot of supply there, and then yet apparently both times we slammed on the brakes at the same area. That's an equal behavior that you got to pay attention to. I don't really want to be ranged. I mean, it's better than being in a 3% range is better than being in a 10% range.
All right. And especially if it is essentially more range bound just because of that rotation underneath. I mean, then there's still going to be, right in theory, areas to take advantage of. If anything, that almost might be a better scenario for, somebody like us, right? Like if you're in the business of managing against the benchmarks, if it's the S&P, and that's kind of the best case scenario, I think. Get some of that rotation, move sideways, be able to capitalize on it. Maybe just some of these small cap areas, and you have a nice range that is defined to make, larger allocation decisions kind of moving forward. But could be after next week, it might not even matter, and we're just rolling. That's why you got to play the game, I guess, right?
Yeah.
I don't know. Dave shared that too. I think this was from Dietrich. Worst November, at least so far. I don't know when he shared this. Looks like as of the 18th. So a few days ago, worst November since 08, which is kind of interesting.
I saw that. And of course, 07 looks like 07 was. But yeah, I mean, I did want to bring that up. Just from a seasonality standpoint, right? I mean, October wasn't what you would typically. Now, the whole seasonality thing, I mean, you can make an argument that it's rocky August through October, and then the seasonality really starts in November. Mm-hmm. I'm more of in the camp that seasonality, the bullish seasonality, historically starts more in October-ish, which we didn't get this year. We're not, clearly, like you just said, not off to a great start. Well, it's the 21st. So we're 3 weeks in. Mm-hmm. It hasn't been a great November. I don't know. I mean, those are things where if we were bullish during a seasonally bearish period, we would say, oh yeah, that's something you got to pay attention to. It's something you got to pay attention to. So I do think it's fair. Like if we're lower in January and February, I mean, I definitely think you're going to be able to look back and say, well, look how dumb and volatile October and November were. Mm-hmm. Like, was that a point?
Well, and especially with
trying to jump ahead of the hindsight here.
Yeah. Well, especially with, the whole January barometer, right? Talking about seasonality. I mean, that would be
January
definitely
barometer.
Big blue. Or the Santa Claus rally. What was it? It's the last. What is it? The last.
Santa Claus is the last 5 days of the before Christmas and the first 2 after, something like that.
So that sounds right.
And then you get the first week of January.
Yeah, first 5 days.
Yeah. First 5 days. And then the full month of January.
Right. Which, historically speaking, anyway, it's, January, the month itself is usually a little bit more, really seems to be a little bit more indicative of what you can expect from what I remember. Because I think we, past couple of years, kind of that whole Santa Claus rally and like January barometer, it's been kind of a mixed bag, at least recently, I feel like. But, none of these things, right, are 100%. So is this just going to be one of those years where that's not the case?
Mm-hmm. And the other thing I think about, now this is more short term, but all right, breath has sucked for a while. VIX bottomed in late August at like 14. We did get a VIX spike in October up to like 28, 29, 30. Another VIX spike over the last week. And we kind of, so far, that's kind of been it. Resistance at 28, 29. If you go back over the last 2.5 years, and that's really it, you could say 34, 35. But for this current uptrend we've been in since the 2022 lows, I would say 30 or 28, 30 has kind of been where you've seen a bottom. Outside of August of last year, that was kind of a one-day thing, and then again April of this year with the tariff stuff. It's at least been short-term bottom. So now that we're there, it's hard to say, okay, this is where I want to be net short. I mean, be net short here now.
I think
but I do wonder if that's that, or it's just another tradable bottom. Yeah, I mean, to get to your point, the other things, right? You had the spike and put call. It was a high volume day, which usually, shows you never have big vol. I rarely have big volume days in uptrends. Like overly, like when you look at the volume bar, you're like, wow, that really stands out. I mean, that stuff usually happens when people are panicking. So you do have the big volume. You have the lower-ish cash levels, which I think we kind of put an asterisk by, but I think it does say something. I don't know. We'll see. So I guess we got to default to price.
Yeah. I think so.
As you pointed out, if we're in this range, I don't know if there's much you can do short term. Well, before we wrap this up, I want to bring attention to the sponsor of this podcast, the Adaptive Select ETF, listed on the NYSE under ticker ADPV, helps investors access two of the most prevalent factors in markets: momentum and relative strength, through proprietary identification methods. The Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or by calling 1-833-880-5200. Investing involves risk, being potential loss of principal. Distributed by Quasar Distributors, LLC. Still can't get that word right.
Proprietary?
Proprietary.
Oh.
Proprietary.
There you go.
I just can't say it on the fly.
Right. Well, and then the pressure's on too. So I mean,
I know. Anything that you would like to leave our listeners with, Kevin, before we wrap it up for this week?
I don't know. I mean, I guess if you had to summarize everything, right? Like, we're holding 6,500. People aren't really going to cash. I mean, considering where we're coming off with the VIX, I mean, historically speaking, it's done pretty well after the fact. I mean, it looks like maybe just rotation going on under the surface. I mean, it's
so
not like...
You don't think this is the top?
I don't think so. I mean, right, okay. The nice thing about operating the way we operate, we'll definitely be able to find out, depending on some of these levels if we break them. But, I mean, that's the thing, too. Everybody's... you can't scroll through X, I feel like, without a majority of people seeming like this is it. So, I mean, is that enough of an indicator right there? I don't know. Yeah, interesting for sure. I'll be fascinated where they close this by the end of the day. If we're below, you use 6,500. Yeah, rough man.
Yeah, I think that's a tough area to be in, right? And I say counter trend move. If the counter trend moves are so strong in downtrends, now that's really going on a limb, labeling this a downtrend. I'm not. I don't think that's fair. Probably need to make a new low. I mean, if we, what would?
I mean, it's really not even out of the realm of possibility.
Do you have to get below the 200-day for it to be a downtrend in your mind?
I don't think so. Because, I mean, where the 200-day is now, we'll call it like 6150. Like just below that's fairly important level, I would say, from like, Q1 25, a little bit of Q4 24. You got the 200-day there.
Yeah.
From the highs, that's about just over 10%, not quite 11%. So, I mean, considering how nice of a run it's been since April, like, is a 10% kind of correction, you're really out of the realm of possibility, and then we move higher from there.
Probably a nice reset. I mean, if we get down to You're right. That would be a huge inflection point. You at 6140, 6150. Yeah, the February 2025 highs. You get down there with the 200-day in that area.
And even
we would really be finding out what the market is made of.
And like the anchor VWAP on, like, I'm just using SPX cash, from kind of those lows in April, that's right around there too, around 62.25 ish, somewhere in there. So, pretty close.
Oh, yeah, look at that.
So is that, there's kind of a lot going on down there where you'd expect buyers to potentially show up. So, I don't think necessarily just breaking 6,500's going to do it. But, and really even kind of, what Dave's brought this up, do we just kind of chop around sideways, build a range here for a little while? That's not really out of the realm of possibility either. Not going to be the most exciting end of the year, but.
No, it wasn't last year either, though. Last year was kind of fell apart.
Yeah.
Beginning of December through mid-January. Don't get to pick your market, unfortunately. I would not pick this one. I would pick one that goes up all the time.
Man, that would just almost be too easy, wouldn't it?
Be fun. It'd be so fun, though. Yeah, but then it wouldn't be.
Say if it went up all the time, we probably wouldn't have a job doing this.
Yeah, it wouldn't have a job. And then there's no competition.
No.
All righty. Well, thank you to our listeners for tuning in. Please be sure to give us a high ranking on your podcast platform of choice. And I assume we will not be doing an episode next week, which would be the day after Thanksgiving. So with that said, wish you all a happy holidays, happy Thanksgiving, safe travels if you are going to be on the road or at the airports. Have a great weekend.
Sure. Have a great weekend. Happy Thanksgiving.